Hey, we're looking at XLU. This is another spider index fund that tracks the utility sector. So this chart looks a little messy, just because it's a 2-year chart, but the way I drew in some of the lines, especially these purple ones, this is like a long-term uptrend for this stock. So just to kind of paint a better picture for us, so I zoomed out to the quarterly, and this just shows that it's been an uptrend since like 2009, mid 2009. It's been locked in this uptrend. It seems to even accelerated in the most recent couple years, and that's why if we go back into the chart we were looking at just with the past 2 years, you can see it's actually had a new uptrend where it's kind of, and maybe that's the way I need to reorganize this one, is drawing a new uptrend. But for right now, it looks like it's now, it depending on how we look at it and just based on the lines that we drew in originally, it's now fallen back into that original uptrend lines, because you can see the top of the uptrend line here in purple, and then you see the bottom of that uptrend line down here at the corner of our screen. You can see it's fallen back in that range. It recently accelerated, getting close to the upper end of that uptrend. It looks like it actually got pretty close to a buy point for us. Again, we looked at this one about 2 weeks ago, so probably around somewhere in this range. The price I have marked in there was 65, so maybe it was actually in this week somewhere. Um, we'll kind of see how this one plays out. I think some of the positive things for this one is it's still in that uptrend for sure. The long trend uptrend, of course. It's below the fair value line. Again, the fair value line's based more on the more recent times, so we'll keep that in mind. And not sure if it's going to come back down to this ultimate buy point that we have marked out at around 60. I think something else that I want to point out is, if we were to just look at this for the past, say, 3 years, so 1, 2, we'll zoom out just a little bit more. So there's like the 3 years that we kind of started with. If I were to draw in a different, and I'll try to make this, we'll try to do this quick, just the parallel ones, where if I draw in something like this would be like the lower of the uptrend, and this would be like the higher of the uptrend. And I'll make this one, it's not gonna be like perfect, and then we'll make this gold. Hopefully that's, maybe orange will be a little bit better. So we have two uptrends in here, and so now we'll zoom in to a more recent 2-year period. You can see we're kind of, we, even with the new uptrend lines, we didn't break it. We definitely saw it was overpriced before in earlier periods, just close to a year ago. Right now we're on the bottom half. So it's not like a screaming deal. It looks like we actually got close. If we would have timed this right, like if it looks like the last time I looked at this was 3.7. If I would have caught it sometime, like literally, maybe if I would have looked at this like 2 or 3 days later, maybe it would have fallen down to like, I mean, that's actually really close. So yeah, it looks like maybe this one's just locked in an uptrend. We could have got this one at that point. Um, but again, we didn't have those gold lines in before. So, we'll keep adding to the charts, we'll build off them. But right now, if I were to just update this off on my own for a little bit, we'll add in long-term uptrend, and I'm just going to update the prices here. So it's currently at 66. I mean, so that's something to keep in mind. So utilities, again, like the trade-off with something like this, if we do get into it, is even though it's in these long-term uptrends, the growth rate is very low. Um, and the way we know that is simply let's just look at from 2022. If we look at, and again, it really depends on when you buy it, but um, I guess what we'll do is let's just look at one cycle. So it hit a very low point in October and it was at 61. We now hit another, what we would say is a low point, and it's at 64. So that was about $3. And on a stock like this, that is about, let's see, I'll just pull out the calculator because I don't want to mess that up. 3 divided by 60. So that's about 5% return. Not bad, considering again this was from October to about February. That's 4 months, 5% in 4 months. Hey, that's not bad. Of course, we then have to factor in the fact that right now it's actually below, well, it's right at that point. So right now we're at another low point. And so we could even mark in, or actually it's up here, but it did come down to about that point that we marked out here in February. You know, so the next low point that we could have said was up here, which would have been about probably about a 5% return. But then all of a sudden, the next low point, we would have lost about 10-ish, maybe about 8%. Then the new low comes down here, probably lost another maybe 3 to 5%. But now it's back here. So I mean overall it's still clearly in an uptrend, even with these kind of broken out low points. I think overall it's still locked in an uptrend. But where I was going again is it's clearly the risk isn't that high, and therefore the reward isn't that high. So it's a gradual thing. Clearly it's going to be better than keeping it in your checking or savings account, because you're not making even 1% there, probably even less than 0.5% in those. So to be making like 5% or 5 to 10% over a year, this is a nice safe one that I'd like to begin a position in this one. So if I were to just kind of look at this chart, for me, buy points again. So again, it's at 66. A buy point for me, realizing the uptrends. So we did put in the 60. Ideally, we would say maybe about 64. I think 64 would be a decent time. And so we'll just add that as our secondary number at 64. And so I think we're good on this. So utilities right here, noted the long-term uptrend. Don't think it's worth selling out or shorting this one. It's a long-term, just hold on to this one. It's currently at 66, so it's very close to the uptrend buy in terms of the horizontal lines. I'd be waiting more for a 60. I don't know if it'll hit that point. It definitely could, but it's more likely to at least come back to the 64, and that's when I'd be looking into it. Again, I think you can't go wrong with this one. It's right in between. I think if we were to even draw in a third gold line in here, you would see it's, and we might be able to draw that in if I draw in a parallel, and I'll just try to trace this one. We'll just trace it and then up to here roughly, and that's not going to be perfect, but that kind of shows that it's still below, it's in the lower half of the parallel line. So I think it's a decent time to buy overall, because normally it trades at the upper end of the uptrend, and right now it's in the lower end. So I think it's a decent time to buy, keeping that in mind. Um, but yeah, let me know what your thoughts are. Again, it's low risk, so you're not going to be making big moves in this one. 10-20% growth, but you'll make a steady income with this one. So I think it's a nice stable index to hold on to. I do like this one long term, so I probably will add to this one. Even at the prices today, I'm not too concerned about, oh, I could have got it $2 or $1.50 less. I think it's at a decent price today. But let me know your thoughts, what you think, and yeah, please like, subscribe, and I'll see you on the next one.